What's going on, good people? Welcome back to another episode of the Trading Challenge. Today is day number 23, May 10th, 2023. We made some trades today, so let's get into it. So today was a big day. We had the CPI news release come out. So whenever anything that's inflation related comes out in the news, it will make a big impact on the market, and that's exactly what we saw today. There was a lot of volatility and a lot of opportunity. So before we get into our analysis, let's first break down all of these levels that we have on the chart and explain what they mean. So let's start right here in the middle at yesterday's closing price. So yesterday's closing price was 33,638. We always want to pay attention to yesterday's close because it will definitely come and be a major factor in that next day's session, which is today, Wednesday, May 10th. So that right there represents the closing price, and all of these other levels on the chart we actually drew during the pre-market and during the market open. So we'll talk about those as we go through our analysis. So let's start over here at 8:30 when the news came out. Had an initial spike to the upside. We had a zone from the pre-market that was drawn way before the news came out. I think this zone extended back to about 4 o'clock this morning, and the zone is from around 620 to about 580ish, somewhere around there. So we broke out of that zone when the news came out at 8:30, immediately pushed up and created a new consolidation range. So that's where I established my first trade of the day at trade 1. So after we had this zone made, let's read our notes. I traded the zone here, but I was too excited and didn't wait for my best entry, which, I knew that it was going to be a lot of news. So I was like, okay, it's opportunity, but it still doesn't mean that you give up your patience. And that's exactly what I did right here on trade 1. I bought higher in the zone when really I'm supposed to buy at the bottom of the zone and then sell it when it gets back to the top. So that was just me being a little bit too excited right there. Now on trade 2, when prices came back up to retest this breakout point, that's where I went long in expectation that the move would continue. But they spiked above the zone and then came back and hit my break even stop. So that's okay, that's fine. But even then, if we look at trade 2, I still should have bought it at the bottom of the zone, because look at where it came back to. Came back down to test the bottom of the zone for the next 1, 2, 3, 4, 5 minutes. So on one of those candles on trade 3, I actually went long at the bottom of the zone, but I didn't hold the trade. And that's the problem I've been having all week when it's been coming to these zones. Like, I know I always say on the stream that I want to hold my zone trades and get better at that, but that's something that I'm still working on, because it's not, I think my problem is that I'm risk averse, meaning that I really want the zone to work and I don't want to get stopped out on the breakout when I'm expecting the zone to hold up. So what I'm doing is I'm not accepting the risk that comes with the position that I'm taking. If I'm choosing to go long at the bottom of the zone, I just have to accept the fact that prices could break out to the downside and stop me out. But if I believe in my setup and everything lines up, I got to take it and I got to hold on to it, because we see at trade 3, if I would have held on to it, I would have been able to take it back to the top of the zone and make profit. So that's something I got to clean up and something I must work on and get better at. Zone trading, I will master it. Just give me some time. So then we come back to trade 3B. So I went long after seeing a continuous bull spike, which is actually one of my favorite setups. So a continuous bull spike gets established once you see 3 candles to the upside all in a row consecutively, and usually you want to see them have strong bodies. You also want to make sure that this spike is happening in a market environment where the trend is clearly established. Now we know for a fact that after the news announcement came up and we saw this spike, that the trend was definitely up. So we'll look for those bull spikes and look to take those. So after the bull spike gets confirmed on the 3rd candle, you look to go long on the close of that candle. And what's interesting is that I was actually studying this exact concept not too long ago, and I wanted to just talk about it with you guys. So look at this right here. This is from May 5th this year, and this was actually last Friday. Well, this past Friday. So let's talk about it. So on this particular day, the uptrend was extremely strong. So remember, that's something you have to have when you trade a bull spike or a bear spike. In a bull spike, you want the uptrend to be clearly defined. In a bear spike, you want the downtrend to be clearly defined. So since we're talking about a bull spike, you want to always make sure that the uptrend, not only is it an uptrend, but it has to be strong where it's no doubt about it, hands down. You could grab somebody off the street that knows nothing, make them look at the chart and say, which way is it going? If they say up, then that's how you know the trend is clearly defined. So always remember this: a bull spike is valid after the third straight green candle. So if you look at this example, we had 1, 2, 3. Now once this third candle got established, that meant that the bull spike was legitimate. So you could either go long on the close of candle 3, or you could go long on the close of candle 5. And let's talk about that for a second. So go long immediately after the close of candle 3, after seeing the ideal one candle wick pullback. So when you trade a bull spike, you have to understand that it's called a spike because there is no pullback. Prices are going to continue up for however many candles it goes. From my experience, I've usually observed that a good bull spike will probably last anywhere from 8 to 11 candles. So there really won't be any like clearly obvious pullbacks where you get a clearly visible swing low that creates a higher low that leads to prices moving higher. Instead, you'll have the pullbacks happen within the candle. So let's zoom in. Look at candle 3. Notice how at one point in time it was a completely green candle and then it closed away significantly from the highs that it made. That right there is your pullback opportunity. That's the best that you'll get, is having that one individual candle close off of its lows. So on candle 4, you wouldn't go long at the close of candle 4 because there was little to no wick. That means that it really wasn't a pullback. You just got to let it ride and let it go without you. But on on candle 5, you see at one point in time it was an all green candle and then it pulled back to close significantly away from its highs. That right there is your entry. So that's pretty much the exact concept that I was looking for when it came to trading today's session and trading the CPI number. And also when we have a news announcement, that only adds to the fact that the trend is stronger, because now it's more participation in the market and the trend is strong. So notice how, let's zoom in a little bit more. So notice how we had the first candle, the second, and the third. After the third candle closed green to the upside and we had all of our other factors check out, that's when I went long immediately on the close of that candle. And I went long on the close so quickly that I caught it at the last second while it was still on this candle. And I took prices up to my scalp target about 20 points higher. So that's textbook for me right there. I have a trading plan. I have setups that I look for. And when I come into the market, I just wait around for my setups to pop up. And then I execute them the way that I should, and I execute them properly. So that's a good job by me on 3B. I was able to make up for trades 1, 2, and 3. So then let's move to the market open. So let's zoom back out. So the market opened at 9:30 right here. We pushed past the zone that we had established in the pre-market, but came back up to test this level of resistance. Now this was the highest price that had been established all day long up here at this red line of resistance. So notice how we initially made the push maybe 20 minutes after the news came out. We had another push maybe 20 minutes later, and then the last and final push once the market opened, and we refused to break past those levels. So I know from yesterday and Monday that we've been in a range bound market all week long. So if I'm seeing more characteristics of a range today, I'm just going to take those setups, because if that's what the market is doing this week, then who am I to expect a breakout when it's been in the range all week, every day? So that's what led me to taking the short trade at 4. So let's read the notes. I shorted here once prices couldn't break through today's highest price. So that represents the red line up here. Now the only thing was my stop got hit at break even, because once my trade goes in my favor by a certain amount of points, I move my stop up to break even to protect myself and make it a risk-free trade. So my break even stop got hit on 4, and that's okay. Sometimes it just happens like that. But as we shot down to the bottom of the zone, I went short as soon as prices pushed down into it, and I took profit at the bottom of the zone like I'm supposed to. So I'm very, very, very proud of myself for doing that, because that's a problem I've been having all week. As a matter of fact, we had that same problem on trades 1, 2, and 3, where we're entering the zone the right way, but we're not getting in at the most optimal price for exit. So the entry is good, the management is great, but the exit is poor. So on this trade, I'm super happy and proud that I was able to get all three phases right. Good entry, good trade management, and a good exit. So that was trade 5 right there. And then after that, we just saw complete capitulation. 1, 2, 3, 4, 5, 6, 7. So we had a 7 candle bear spike. Now, on this candle, well, on this entire move, I wanna talk about something important. And I want to talk about doing your work on the chart before you come into the session, so that way all of your levels of support and resistance are already drawn. Because once we broke out of this zone, I started thinking to myself, if we had momentum like this, then we have to be headed somewhere. So where exactly are we going? And then I started thinking through my mind, like, what are all the levels we could potentially go to? Okay, we got zones on the chart, we got support levels on the chart, but where's yesterday's closing price? At the time, I didn't have the closing price put up there. So I had to go back to 4 o'clock from yesterday, drag that level across, make sure it was correct, and then come back to the price action for today. And that probably took me about 30 to 35 seconds. And within that time, we saw prices start to kind of move away a little bit and start this down move. So I missed out on a good entry to take prices short past yesterday's closing price once we broke through it, because of me not doing my due diligence like I should have done. Every night when the market is closed, I go back to 359 and I plot the horizontal price that the market closed at, and then I run that line throughout the rest of the session so that the next day it's available to me and I don't have to go back and put it on the chart. So that's just a lesson right there about making sure you handle your business before you get on the chart. I was super excited this morning. I didn't even think about if I had all of my levels up there. So it's just another lesson. Always make sure you're prepared 100% for the market, because once things get going, you might not have enough time to put your levels and stuff up there like you want to. So just a quick lesson I learned right there. So after we see the continuous bear spike for 7 candles, we come back to the zone that we established in the pre-market after we broke through yesterday's closing price. So at this point, I was kind of saying, are we going to have a bounce back to the upside? Because let's zoom out a little bit. So if you notice, we had an up move where we pretty much went straight up and then eventually came straight back down. So anytime you have a move like that, you usually establish a trading range where you'll go up, come back down, and then go all the way back up. So that's what I was expecting when we came into that zone right here, but I was a little bit patient because I said, look, if the closing price is up here and volatility is this strong today, it's a high possibility that we come back, test the closing price, and then move down. But instead of doing that, we tested the zone, so I never got short right here, and that's okay. You don't catch every setup that you want. Some of them you get, some of them you don't. But then when prices came back to candle 6, I was like, okay, if we push past, now remember what I told you this blue line was, it was the lowest level of support that we established all day. So I said, if we just push past the lowest level of support, okay, I know the downtrend is strong, but we gotta at least have some type of pullback. So if we do get a pullback, I'll short it from here and see how low I can take it. So that's exactly what I ended up doing at 6, but I expected prices to come back and push through 500. That's actually not what happened. They actually only came all the way down to about 515, 520. So my stop eventually got hit at break even, and that was cool. I'm okay with that. So then I came back at 7 and said, well, if I shorted before we got to the support level from yesterday, maybe I need to short once we get to the support level and test it and don't break through it. So that's why I took the short trade at 7. I was in profit for a little minute and I was able to move my stop to break even, and then that break even stop came back and got hit. Now this right here at trade 7 represented a pivotal point in the market for me, and something that I've been learning over time throughout my trading career. So that lesson is, if you take 2 trades in the same direction and they both align with the trend, and you both took those trades from good entry points, so in a downtrend you want to short as close as you can to what is now resistance. So that's exactly what I did on 6 and 7. And when you see two of those trades back to back and they don't work when you had great entries, that's the market trying to tell you something. That's the market telling you that either it's about to pull back or it's about to be a reversal. But no matter which one of those occur, it's telling you that the trade that you're taking right now is not in play. So you got to be patient. So that actually helped me on trade 8 because you see I drew this ellipse right here. So I draw this once I see a higher low. And this actually created one of my favorite patterns, which I call a downtrend reversal that has a higher low that gets established. And it usually comes back to retest the higher low and then move up for a good amount of time. And sometimes it'll move up throughout the rest of the day in that entire session. So that's what I was looking at right here at 8. And notice how I drew the support line at the bottom of the wick when it came to that ellipse where the higher low was established. That's textbook for me, because what I want is to see prices move away from the higher low and then come back to retest that level of support, and that's where I go long. So I attempted to do that on trade 8, but I closed it out manually because this downtrend was really scaring me. Because that's the thing about this setup. Naturally, it's gonna come when the market doesn't necessarily line up with what trade you're taking. I'm going long even though we had a super short move, but remember all of the reasons that we talked about. We were coming into the lowest prices for the day, and then we formed a higher low at the lowest prices for the day after we've already been in a range bound week, and we just came to a potential bottom of a range today, and it's at the 550 level. So I'm like, okay, if I see my setup, I just have to take it. And actually, let's talk about that, because what's interesting is that I studied both of these setups that I'm telling you guys about today before the market even opened. And it's crazy how it just came back to actually come in play today. So let's actually discuss that. Okay, so this is an example I want to show you about a downtrend reversal with a higher low that gets established. This one was from April 19th, 2023. So notice how it's very similar to what we saw today, where we had a strong downtrend, and then eventually we had capitulation right here, right? So if we go back and look at today's chart, we actually need to bring up the live version. Okay. So if we look at today's chart, here's the capitulation that leads to a higher low that has a retest that comes back. So if you look at my notes, the exact same thing happened on April 19th. Strong capitulation selling that led to a higher low. Now, I don't have it drawn on here, but we could draw a quick support line from the bottom of the wick and extend it across. Now, if we extend it across, notice how prices come back and retest that level of support on the wick 2 candles later. So once they made the higher low, they moved away, they came back to retest it, and then they moved up higher off of that for a considerable amount of time. And I think for the rest of the day, if I'm not mistaken, because this happened at the close of the market on April 19th this year. So that's exactly what I saw today. And it's crazy how if you study the market, sometimes you'll see things that just clearly pop out and you can make money from those. So that's what I saw right here. At the capitulation selling, higher low gets established. I went long on the retest at 8, scratched the trade because I was a little bit scared. But then when prices bounced back up and came back above the support level, I had to get long because that's my setup, and I just feel like I wouldn't be doing my job if I didn't take that trade. So I took the trade at 9 and was able to take it up, not only past the lowest prices of the day, but also up to the previous zone that we had just broken out of. And what's interesting is that today prices actually ended up going all the way back to yesterday's closing price, went through that area, and then came back to 700. Now, once they reached this zone up here, the downtrend continued for the rest of the day. But I found my setups where they were, and I took them, and I did a great job on it. So I would say overall today, I'm very proud of the work that I was able to put in, because it'll be days like this where I might have trades like 1, 2, and 3. And then when those are not right, I might just stop and say, okay, it's not working for me. But I had the discipline and persistence to say, look, Those trades were your setup, you just didn't trade them right. So be patient throughout the rest of the day and only trade things that you know and trade them properly. So that's exactly what I was able to do on 3B. That's a trade that's in my database and my playbook. Trade 4, trade 5. Those are plays that are in my playbook that I'm always looking for in the market. Trade 6, same thing. Trade 7, same thing, as well as 8 and 9. So every trade that I took today was a trade that came straight out of my notes, my research, and my playbook. So I'm super happy that not only did I identify it correctly, I traded it correctly. That's the thing, because for me, I know a lot of times I can identify the setup, but then trade it the wrong way. Kind of like what I did on 1, 2, and 3. So for me to be able to bounce back and actually make it a good day, I'm very proud of that. I would say overall, I still need to work on my zone trading. I gotta get those zones right, because zones, it's like sometimes I'll do great on them and then other times I'll just do terrible. And I don't want that type of inconsistency, because I don't feel like that's gonna be a successful recipe for profit. I need to be consistent, not only with my downtrend reversal higher low setups, my short it as it comes back into the zone, or short the top of resistance for the day setups, but I also need to be good with my zone setups too. All of my setups I need to be proficient in. So that's what I'm focusing on going into my back testing session tonight. And I also want to focus on just being patient, because that's always something important that you got to cover in the market. So I hope you guys can learn something from this today. We also have another news announcement. We have PPI, Producers Price Index, coming out tomorrow at 8:30. So that's May 11th. Now I won't be trading that, because I only want to trade one news announcement per week if the news comes out back to back, because it's just too stressful for me to trade news, and I only have enough energy inside of me to do it once per week. So tomorrow we'll be back at the regular time at 9:30 a.m. for day 24. But until then, take it easy.